This idea that the subscriber number getting up towards 90 million, but as Joe mentioned, what they're talking about by 2024, I mean, those are pretty phenomenal numbers. Why do you think the stock did as well as it did yesterday? Was it that or was it something else?
Well, I think investors were mind blown by the amount of content that was introduced. It's not easy to commit to something like that, especially in a pandemic with so much production being paused. The other thing I think that gave investors hope was that so much of this strategy is international. A new Star service that's kind of the Hulu version of international. You cannot expect to compete with Netflix unless you have a smart international strategy, and Disney brought it yesterday.
Yeah, and one of the things that Bob Iger said was we're all about finding quality, not volume, and that was seen as a direct kind of snap at Netflix. Right. Is this a world where there's a loser in this, or is this like, okay, Disney's going to be huge, Netflix is going to be huge, we'll see what happens with all the other services?
So yeah, there's winners and losers, but look, I think Netflix is certainly not going away. Disney is not going away, and I think it's a fight for third and fourth place. I think Disney, they did a really good job of supercharging the content. Now, so I think Sarah made a great point about what Bob was saying about, you know, it's about quality, not just about the amount, the quantity. At the same time, I mean, there are so many shows that they're announcing, so many films and series. You know, you need both. You do need the volume. You know, I'm a Disney Plus subscriber. I'm a Netflix subscriber. After a few months of Disney, I was like, you know what, I've seen everything. Not necessarily because I've seen everything on the service, but, you know, I already saw it in theaters. So it's a nice service to have. It's relatively cheap. So it's just there. Whereas Netflix, there's so many more things coming on. So you do need the quantity. The numbers are also great. I think the street is responding to the fact that they blew away expectations. They set another ambitious target, 350 million now, instead of whatever it was that they had before. So it's a nice number to have. They rounded up the total number of subscribers across all their platforms. It's like 137 million. But here's the thing. They also lost $2.8 billion in their streaming division in this past fiscal year, right? It's like setting up a storefront and selling dimes for a nickel, right? They'll be in lines out the door. They have to get, you know, they have to find that moment of equilibrium of where they're going to be pricing it. And they are raising the price of Disney Plus relative to how much they're spending and relative to how much they're losing by not licensing these things elsewhere. So there's more math to be worked out. The numbers look good, but the profits are not there.
Although, Ed, to be fair, I mean, this is so early on in this thing. You got to figure there's a little bit of the if you build it, they will come. You got to spend the money now to get the subscriber growth there and then be able to. The idea that they're already raising prices, I think, came as a bit of a big surprise. The idea that they feel like, OK, we're good on this and people aren't going to cancel once they see what we have.
Right. And Netflix has been raising prices as well. And, you know, but it also reflects how Netflix's business has been running for years. Right. Like a lot of cash burn. Right. So the street, in a way, is also rewarding Disney for looking more like Netflix. Right.
Yeah, right. Lose more money, we'll like you more.
Right, exactly.
Sarah, let's talk a little bit about what this means for theaters, because we've now heard from AT&T who says they're going to let it all hang out. They're putting it all on the streaming service at the same time that it's going into the movie theaters. Disney is being a little more selective in what they're putting out there. But what does this mean for the future of theaters? And, you know, Disney's taking a little bit of a softer stance. You think that's wise?
It's their only choice. I mean, they have 40% of the domestic box office, so they have a lot more risk if they were to put everything onto streaming. The other thing, Ed Lee wrote a great point earlier this week. HBO Max is really designed so that AT&T can sell phones, and AT&T at this point is not as concerned about hits at the universal box, their box office. I think the big theater question is going to be, when a vaccine comes, do consumers still go back to the theaters and make it not much of a niche thing? We saw before the pandemic that the people who were buying tickets were people who wanted to see action and adventure films. After the pandemic, I expect the exact same thing to continue to happen. You're going to have fewer theaters. The only types of people who are going to go and the only types of films that are going to go there are jam-packed action adventure, and most other things are going to be on streaming services, and that's dramas and rom-coms, et cetera. The thing I'm looking to see, quite frankly, is whether or not this big stimulus package has a little relief for some of the independent theaters. They're hoping to get a $15 billion package. We'll see if that pulls through.
Shepard Smith here. Thanks for watching CNBC on YouTube.